Hello and welcome. Welcome, welcome, welcome. So we are super excited, and people have been screaming and shouting at us to get something in England. So, Glenn, thank you for helping us have something in England. You've helped us have Europe. We've obviously had America for a while, and now you've helped us have England. So I'm very excited
Yeah,
to share with you this investor launch. It's a capital growth private equity in England, and I'm really looking forward to sharing more about it. Daniel, thanks for jumping in. I'll introduce you guys properly now. And what I just wanted to say to everyone, just to remind everyone that we're not giving you financial advice. We're going to share with you our experiences, our knowledge, and our skills. We might even share with you some of the mistakes we made. But at the end of the day, we're providing you with the information so that you can make the right decisions for yourself. Glenn, from your perspective, I know that you're kind of leading the team in terms of Caleo Private Equity, and I know you've got two partners of yours joining from Caleo Capital, and we'll introduce them just now. But before we go there, I'd love you kind of to just talk a little bit about the ethos of Caleo Private Equity. I know that no one likes to kind of blow their own trumpet, so I'm going to do a little bit of that for you. But between yourself and your partner, you're a CA by background. He's a CFA, PhD from Cambridge University. But basically, in simple terms, both of you have been in the institutional space, private equity specifically in the property space, or a large portion of it over the last 20 years in the private equity space. But I'd love you just to talk a little bit about who you guys are, the ethos of Caleo Private Equity, and why and how you find partners. Because before we even worry about the deal, the most important thing in any deal is who are the partners.
yeah, Scott, thanks. And I see Dan is on. I think Anthony's probably going to join us hopefully in the next few minutes. But I'll fire away on the Caleo private equity side. And that's basically you'll see how I bring Dan and Anthony into that because they're actually on the Caleo Capital side. So just so everyone's on top of this, Caleo Capital is effectively wealth management company. They manage high net worth money, family money, and so forth. So the Caleo private equity business, of which I am a partner, is a separate business, but it works very closely with Caleo Capital. So a little bit of background. I see Scott's popping up uh, our internet site here. Glad to see it works.
So just
Yeah,
just
so
very just very
so
quickly before I interrupt you, because I'll take it off so that people can see you properly. But I just want to
mm,
read what you're saying that communities are more powerful than networks. At Caleo Private Equity, we aim to build and grow our community through investments and advisory activities. We bring together like-minded individuals and companies that exchange resources and advance ideas, deepening and solidifying relationships of trust. So I just
yeah.
wanted to kind of bring that up because I think it's in essence going to relate to what you're about to talk about.
Yeah, it is. So, in terms of, in a nutshell, my history obviously is in private equity, structured finance, real estate, private equity as well. And that dates back to when I was actually part of Rand Merchant Bank, investment bank in South Africa. And I spent the best part of, I think, about 20 years there. And through that experience, we managed funds, we invested in funds, very large funds. I was part of a fund that was a $500 million fund that was developing real estate in Africa. Um, and ultimately, through that experience, we realized there were certain things that we think we could offer as a private equity business that currently weren't really being done in the industry. And I think it comes down to what you were talking about, that it's talking about community and relationships. And ultimately, we found that successful private equity business, certainly in our view, has a lot to do with the people behind the business. In fact, I'd say it's got 95% of it is the people behind the business, because ultimately, not only do they need to find an idea, turn that idea into revenue generating idea, but more importantly, they need to be agile and they need to adapt very quickly. And we found that good entrepreneurs have this ability to move around and change quite quickly as and when required. So ultimately, we started the private equity business. Our focus really is on growth businesses, growth capital. We don't focus on ideas. We're not a kind of a seed or an angel investor. We like to see businesses that actually are generating revenue, that either are profitable or going to, we can see a very clear track to how they can become profitable. I think in terms of the core values, I talked about relationships. I think there's a few. There's the relationship component, and I'll talk to that as it specifically refers to this opportunity, which is Carifit. I also talk about community, which actually, funny enough, is very much a Carifit theme. Um, and those two things I think are very crucial because ultimately, if you look at this idea, it's come through the Caleo community. And what is the Caleo community? The Caleo community is our investors that have invested into deals with us. It's also businesses that we invest into. It's people in those businesses that then refer ideas to us. So to give your investors an example, we probably see a deal a week, an opportunity a week, one a week at least. And in a year, we might do four of those, maybe four. So we see a lot, and we don't actually go out and try and find deals. We actually get them through our network, through our community. And this opportunity comes right, through Dan here. And Dan is part of Caleo Capital. He's the CEO of Caleo Capital. And ultimately, Dan knows the CEO of Carifit for quite some time. Dan can talk about that. But that's a prime example of why we like it. We can immediately get a very good handle on what the type of people are, how they operate, can we trust them? Because there's a massive element of trust. And ultimately, that was the background to that. So I think I've talked quite a bit. I think what I want to do is, Anthony, I see he has jumped on, and I know Anthony wanted to just give a very brief overview of how something like Carifit, which is a private equity deal, fits within the context of an investor's portfolio. So perhaps,
Could I
yeah,
actually, sorry to butt in, because actually, Anthony, I'm so glad you're here because I was literally going to show your slide. So I just want to show it, and you can kind of talk to it. But this is that slide that you've done for our mastermind members, where you've showed them about diversification and the impact of private equity in a portfolio versus non-private equity, etc. So I'm just saying I've got it here if you want it to talk to it in terms of your reference of what you're talking about.
Yeah, sure. Thanks, Scott, and thanks, Glenn, and apologies for being slightly late. I'll keep this short and sweet. The reality is that a lot of the work I've been doing with some of the mastermind members, there's been an obvious need for two things. The first is private equity. And secondly, probably more importantly for this discussion, is a need for an opportunity that fits into what we would call a growth opportunity, right? So this is an opportunity that is not necessarily overly focused on dividend or interest distributions, but something that's looking to aggressively grow capital over time. And I think when some of the clients listen to this, they'll know who I'm talking to because we've had these discussions before. But ultimately, we see Carifit playing in this space. It's a growth opportunity. Like I said, Glenn will dive into the details, but it doesn't necessarily have a strong dividend or interest component. But it is looking to build up that capital base over an extended period of time. And I think this should resonate a lot with a lot of the clients. But that's a lot of people are looking for this kind of opportunity to fill the gaps in their portfolio. I think we've spoken at length around the importance of private equity as an asset class in the holistic portfolio. I think we've spoken at length around 30% being that sweet spot. But like I say, when you take it a level deeper, this is an opportunity that in particular fills that growth bucket within the private equity carve out. So that's why I like it. That's why I wanted to just jump on and kind of position it in that way. The other important factor and other thing that I really like about this opportunity is that it's diversified in terms of its location, which Glenn will touch on shortly. But more importantly, it's diversified in terms of the sector in which it competes in. I think that's another important characteristic to mention. And another thing that I've been seeing and doing a lot of the analysis work with clients is that there typically tends to be an overexposure in the private equity category to a particular sector. So I think this kind of ticks two boxes. It's a growth opportunity. It plays in a jurisdiction that a lot of clients don't necessarily have exposure to, and also adds that diversification element from a sector point of view. It plays in quite a unique sector that not many clients have exposure to. Yeah.
Just before you hand over, if you don't mind, Glenn, Anthony is assuming we're only talking to the mastermind members, and they're the privileged few that get to deal with Anthony one-to-one. And obviously, this is available to anyone to be able to invest in. I just wanted to share quickly and just give a little bit of perspective to what Anthony was just saying. So, if you take, and this is I've literally stolen from Anthony's slides. If you look on the bottom here, you've got risk. So you've got kind of low risk and you've got high risk on the right. And on the return, you've got low return, you've got high return. And this was some research done over a 25-year period. And if you look here on the bottom right, you've got kind of, so effectively it's low return, high risk. And it's kind of generally a breakdown between 30% bonds and kind of 70% stocks. And this emulates kind of the average portfolio of the average person going and talking to a financial planner, etc. If on the left-hand side here, you take where you've got low risk, high return, it's got 30% bonds, 50% stocks, and only an allocation of about 20% in private equity. But just looking at what a significant difference it makes over a 25-year period. And I don't know, Anthony, I don't want to go into too much detail because this is not a lesson about private equity, but it is important to show because what I find with most of the investors I talk to, no matter how sophisticated they are, they're not aware, firstly, that private equity is an opportunity they should be looking at. And secondly, they're not aware of the impact it has on their overall portfolio. I just wanted to position this because it's very important, Glenn and Daniel, before we actually go into, well, why is this a good opportunity in the private equity space, you know?
Yeah. I think you've hit the nail on the head there, Scott, and I think you've explained this chart exceptionally well. I think that's really what I'm saying in a nutshell, is that it's important to have private equity as an asset class within your total portfolio. And it's also important to have diversification amongst that carve out, right? We're not talking about everything allocated to one opportunity. We're talking about multiple opportunities within that private equity carve out. So if guys are coming onto the Wealth Migrate platform and they're looking for opportunities, we're certainly advocating for a diverse array of those opportunities. And I think this deal really ticks that box from that sector diversification, and B, that jurisdictional diversification. It's UK based. A lot of the deals we see are in the US. So it offers multiple layers of diversification within that private equity carve out.
And now the question is, and thanks so much for that, I deeply appreciate it. Now the question I'll pivot back to you, Glenn, and to Daniel, because now we talk about the needle in the haystack, because everyone's heard of private equity, and then it's like, okay, well, great. How do I get private equity? Well, firstly, private equity is highly risky if you don't know what you're doing. Okay, because every mate, down the road has a new thing, and they ask you to put money in their business and whatever. I mean, technically, that's all deemed private equity. Okay, but at the end of the day, there's private equity at the mom and pop level or the retail level, and then there's at the institutional level. And I want to repeat what Glenn's already said. They get a deal per week. Okay? They have no shortage of deals. So it's how do you find quality in that, I'm calling it the needle in the haystack. And I always believe, and this is where I think there's a huge amount of synergy between how our two companies operate, is it comes down to the partners. And so, Glenn, I wanted to kind of hand back to you. I know you've already alluded to it, but now let's go into, okay, private equity is a good investment. Now, how do we know that this deal, and by the way, none of us have a crystal ball, nothing's guaranteed. So let's just be clear on that. But an active level of experience, partnership, due diligence helps you make a much better choice than an uneducated choice,
Yeah, I think I know Dan's probably itching here to have a say because he obviously knows the company very well. But I do think that there is an element of as you say, experience in terms of having, like to think I have been around the block a little bit, but you learn very quickly, I think on this opportunity, and just so we don't hold the suspense there, we're talking about baby carriers here and an app linked, and a fitness app that's separate but linked to the baby carrier. The reason I raised that immediately is because the first time I saw this opportunity, it's like, oh, baby carrier, and immediately you think, well, gee, everyone's done that, I mean, if anyone here has had kids, they've probably heard of Baby Bjorn or some of the big brands. But I think through time, we've learned that you don't have to reinvent the wheel. What you have to do is you have to find a product that ultimately there's a definite need for that product, And you need to find someone that can actually do a better job at providing that product. And if you can do that, you can quite easily build a very successful business, especially in a market like baby goods. So that's really it. Each deal we see, we pay attention to it, we look at it, we unpack it, we look at the management teams, we look at the industry, we look at how they position, we look at the success to date, we look at how they, all of those things are part of your general private equity process. But ultimately, it comes down to saying, how do I get comfort over key values or cause that I, as a private equity manager, have? And that is the people. That is the type of investment. We focus a lot on conscious investment. We like to believe we look at businesses that make a difference. And and that can be anything. We've got a brick manufacturing business that uses waste materials. Carifit, for example, has a very high content of recycled plastic bottles in its products. So, once again, does it make a difference? So those are just a few. If we had an hour, I could dive deep into why and what, but I think that's kind of gives you the high level. Perhaps I don't know, Scott, I think it's a good idea to hand over to Dan to kind of give him the background to how he knows Vern, the CEO and founder, and how this opportunity came about.
I'll just share quickly, Daniel, while you come up, a little, just basically so people can kind of see the website, etc., in terms of what we're talking about. But yeah, I don't want to steal your thunder, and I'd love you if you can just kind of explain what your role is and position as well, because I think it's important for people. And then again, the relationship with the investors, well, not the investors, but the partners.
Yeah, so I'm a managing partner at Caleo, and what that means is I take a number of hats dependent on sort of the company that I'm helping out facilitating. So in the collective, which is Caleo, we have a number of sub-companies such as Caleo Capital, Caleo Private Equity, and I have an involvement in sort of driving strategy, operational excellence, and then sort of helping out. My background, I used to be a board member for Deutsche Bank International, so I was a private banker, through my early days, and then rose in the ranks in leadership positions with Barclays, and then latterly I was moved over to Deutsche Bank. So I used to be a market head looking after the Channel Islands, Ireland and Cayman. So I've got quite a broad spectrum of experience in private wealth, and indeed sort of that institutional wealth, which I think spans into private equity. So with regards to Carifit, I met Vern. We both went to varsity together. So sort of 1999, I walked into a dorm, and Vern was lying in bed, and one of his roommates, Simba, was sitting on the bed, and it was all to do with sort of cricket, rugby, and what have you. So we went to a centre of sporting excellence. So both Vern and I studied sports science at university. So that through a background, Vern is a qualified sports scientist, biomechanics and all types of theories of skeletal movement and various other bits and pieces. So when we graduated, I span off and got into finance, and Vern actually started to do post-natal exercise classes in southwest London, and built quite a niche following. So when a lady gives birth, he used to facilitate sort of the rehabilitation through exercise. And the idea being is you'd strap a baby to your front, so you still got that connectivity with the child, and then basically go through various exercises to enhance your postnatal rehabilitation, to increase pelvic floor strength, to increase tummy tightness, those sorts of things. So I think that's the first bit is the exercise classes, and what he was offering is from a sports science background. As he started to develop and get a following, he then started to partner with a company called Ergo Baby. So Ergo Baby is one of the sort of premium baby carriers on the market, and so they saw what he was doing and said, "Great, we want an exclusive partnership where anyone doing your exercise classes can get, a percentage discount on the baby carrier, and then we promote it together." And he did a number of years of promoting with Ergo Baby, and then actually started to build some big community partnerships. So a lot of the big corporates through the UK saw the benefit of using an exercise class with a baby for postnatal depression, brings people back to work more quickly, gets them fit and ready. So he had partnerships with a huge number of corporates. And so sort of post-COVID, there was a lot of online subscription that was going on, or during COVID. So certainly in the UK, there was a chap called Joe Wicks that was probably one of the bigger people that used to do it. And then Apple TVs, and Apple Fitness largely logged onto this around about post-COVID to drive some kind of exercise regime when you were stuck in home. And this gave rise to an idea where Vern thought, right, I can actually start to have a look at maybe making my own baby carrier. And that sort of developed to the point where he poached one of the biggest designers from Ergo Baby, and she decided to join Vern. And then they started to decide what they were going to do in the development of a baby carrier. And I think this is the interesting bit is the baby carrier, when you purchase it, it comes with an app subscription. And the app subscription is actually kind of the third piece in the development of the product. So the first bit was actually to build and develop the baby carrier. And Vern reached out to me about 18 months ago and said, look, he wouldn't mind a bit of help and a bit of advice. And so they did their first raise 18 months ago. And what he wanted to do was keep it within the community of Carifit. So everyone that had been using the product and everyone that had been going to his classes, he wanted to make sure that he sort of, I suppose, rewarded them for being part of his community. So they invested, they put together a raise, it was fully subscribed. And most of them, well, in fact, 100% of them were from ladies that had completed his exercise class. That gave him the capital then to invest into the baby carrier itself. And it's very unique, and it's got covered by a number of sort of patent pending, which is the application of putting a baby carrier on singularly. So I've got 3 boys and use baby carriers throughout, all of my children. And one thing that I found was with a lot of baby carriers on the market, it used to take myself and my wife about 15 minutes to try and trap the child in, because it's kind of a reverse backpack. So you could never sort of, do it on your own. And I think Vern solved that first problem, which is, a single parent being able to put it on without facilitating the need of anyone else in the room. So it's simply a sort of a strap that goes over the head. And so, he solved the problem there, which I think is why he's getting so much market penetration. The second point, which is also very interesting, is Vern is fastidious when it comes to science-based application. And what this does is it's clinically proven not to put pressure on pelvic floor. So from a medical benefit, it's actually tremendously useful in the market, so much so that the NHS have actually adopted his app and carrier. So if you have a baby born in the UK, and you're showing signs of postnatal depression or pelvic floor weakness, then this is something that the doctors would point them towards through the NHS app subscription service. So as it's starting to gain momentum, the app's gone from very little usage from market development, and in the last 18 months, it's now got somewhere close to around 4,500 subscribers. So it's gaining market penetration. And also the carrier is getting some amazing reviews. And so much so that now one of the big problems in sort of creating a distribution model is going out to someone and getting them to distribute it through their platform. Originally, Vern did this through a single store, which is a big UK store called John Lewis in the UK. And then suddenly they said, well, this is going so well, we'll give you 15 stores. And then off the back of that, they now have nationwide distribution through John Lewis stores in the UK.
I mean, to put in perspective, if you're not from England, John Lewis, what would be the closest equivalent in somewhere like South Africa? It'd be like Woolworths, basically, or something like
an Edgar's, yeah.
Yeah, Edgar's, yeah.
Yeah.
I mean, it's a massive, again, what would be a good one in America, just because not everyone's from England and South Africa. But it's like the massive convenience stores that have got clothing and a bit of everything, but kind of middle to high end is what I'm trying to point out.
Yeah,
no, absolutely. Yeah, absolutely. And that distribution model has grown to an online presence. So there's a couple of big baby distributors that you just don't really have in South Africa. So Winstanley's Pramworld is one of them. And basically it's got such a good online presence that actually the turnover through these kind of windows is huge. So now Vern also has just signed a deal within Europe across 250 stores, and people are coming to him because of the ease and application of actually just the baby carrier on its own. So it's actually quite interesting and easy just to focus on the baby carrier, but the important movement of what this product is initially it was Vern running exercise classes from a rehabilitation and exercise point for people that were giving birth. Then the carrier was just sort of the natural thing to make a more ergonomic carrier, more friendly for the exercise classes. And then the app was just an additional add-on. But at each point, he's been able to monetize that return. So I think what he's looking for in this second raise, and knowing Vern very, very well, keeping contact for the last 25 odd years, he could do this himself. So he has enough cash flow within the business to do this slowly. But in his own words, what he wants is a bit of rocket fuel that he could, stick on this business to really grow it aggressively. With a view that he thinks it's a really strong buyout, by some of the bigger baby goods providers in the market. So what they usually do within baby market is they don't try and replicate it; they just try and buy it. So there's a lot of off-market deals where people are acquiring, big products to add to their field. And in fact, he has had an offer, for the baby carrier, but it's just a bit too early for him. So he wants to see it through this next cycle, which is really the sort of the big hockey stick growth cycle, and then sort of review those acquisitions, or offers, on the next cycle, whenever that may be.
I think I'll jump in here, Dan. I mean, just to give the investors some indication. I mean, they've sold, they produced about 8,000 carriers, and we're talking, kind of a start in 2023 here. So 8,000, kind of sold, of which, produced. Another 2,000 are currently in production. Of the 8,000, I think 5,000 have been sold through John Lewis stores. Another 2,000 are effectively pre-sold. So there's a lot of traction going on just in terms of that growth that we don't see. And the other thing, which is quite interesting, is that John Lewis stores alone, I think their penetration rate in terms of market share is already at around about 20% on the shelf. And that's for a carrier that's actually priced in and around the premium carriers. I mean, it's effectively a 200 pounds, and the other competitors are there and thereabouts. Some of you very high end. I think the one French brand has a carrier that goes up to 5,000 pounds, if I'm correct. So I think that's quite important. And your point around rocket fuel is ironically, it's the reverse inquiry that's been quite incredible. I was chatting to Vern and he was telling me, just because they're online, they're now having obviously a lot of inquiries coming in from the US, and the US is a very large market. So the question is, how do you ensure you don't just go everywhere too quickly? And I think the discussions we've had with them is to try and keep the focus, obviously, in terms of, first of all, the UK. The John Lewis store arrangement was an exclusive arrangement, which, as you well know, is no longer, because obviously Vern wanted to sell it more broadly across the UK. So that now is in place. And they're moving obviously into Australia, New Zealand, Ireland. So there's no shortage of demand for it. And the other interesting thing, which you did touch on, is just in terms of the app itself. I've seen enough businesses where there's an app. So sometimes there's just an idea. Okay, there's always app ideas, but then there's actually an app. But then there's no real traction on an app. And I think what's important here is the ability for them to retain the users on the app. I think they have something like a 90% retention rate on the app. So I think that it's quite crucial. You've got two different elements here, both generating very strong levels of revenue.
So Glenn,
I think.
Sorry, after you.
I was going to jump through some of just one or two points on the slides. I mean, the slide I brought up here was obviously just very much around the product, to give the investors a feel for how the baby carrier looks. I think it's worth, if you Google Carifit, you can go on and have a look at it yourself, and you can quite clearly see, obviously, Dan's mentioned quite a few elements on that carrier, but there are others around the fact that it can fit all different sizes, the fact that it distributes the weight of the baby across in a much better way, and so forth and so forth. So the product we think is excellent. In terms of returns, just to give the investors an idea, the return rate I think is just under 1%. I think they've had 12 carriers where they've had some issues out of 7,000. And that's important because for us, this whole discussion is about injecting new capital. So just to be very clear, we're looking to invest somewhere between £1 million and £1.5 million into the business. And the key part about that is it's for growth. So, with growth comes risk because suddenly you've got much higher production levels. So a lot of the work we've done is to understand the ability for them to scale up quickly to produce a high quality carrier as they have done, and obviously continue to do so without high levels of return or any issues with that. So we're very comfortable that this business can scale and can increase and grow quite rapidly.
Dan, can I make a suggestion? Should we go through this presentation you got and maybe get to kind of the details of what the investor can be looking at?
Yeah. So it's decided not to move. There we go. Yeah. So this is actually a teaser or an information presentation that generally I think, Scott, you'll send through to the investors, or they can have a look at in their own time. So I'm not going to spend too much time going through the detail of this and reading it out. We covered a lot of this as we go. I think the important aspect here is just to understand and explain what this, how this looks from an investor perspective. The investor invests in an offshore entity. We're currently looking into two jurisdictions, either Isle of Man or potentially Malta, because they're tax efficient. And effectively, that entity, that special purpose company in that jurisdiction will then make the investment into Carifit in the UK. What's important about this is it's private equity. So obviously it's equity. It's an equity investment with equity upside and equity risk. But what we try and do, which, you sometimes can get this right. Not many private equity players can get it right, but what we've managed to do in this situation is we've structured that investment so that effectively it's a loan, a shareholder loan in the business. And that's quite important for investors to understand, because with that, we've attached an interest rate as well, or we call it a preferred return of 5% on the investment. So it's got two important purposes. The one is it generates a return for investors. So there's an equity return, which hopefully over time you're going to get as the business thrives. You're going to look at hopefully a significantly higher value of capital at the end of the term, of the investment term. But in the interim, we're hoping that investors will receive about 5% of a preferred return on their investment per annum. So I think that's the one key thing. And that the reason I call it a preferred return is because it's not a guaranteed return. In other words, as long as the company's doing well, it'll pay the 5%. If we're having challenges in the company, then the 5% just gets deferred. And hopefully in the following years or when the company picks up again, then the investor recoups the original, the money that is owed to them through that 5% return. The other reason that it's important to understand that loan investment is because what it means is you actually, if investors understand, we call it the capital stack. They understand, in a company you can invest, you can put capital into a company in several ways. You can do a senior secured loan. A bank would do a senior secured loan. You can do subordinated loans. You can do preference shares, and you can do equity. So each of those has a different level of security. Obviously, a bank loan is the most secure. So if there's an issue in the company, the bank's going to get their money back first. What we've done here is because we've created the structure and ensured that there's a loan component, the investors actually are quite high up in terms of their security in this business. And I think that's important. So I'm throwing a lot here, and I understand our investors may, some of them are at different levels in terms of understanding that, but ultimately, this is an equity investment with an equity return. If you look at this, we talk about returns, an IRR of 30%. Effectively, we are targeting to generate 30% on your investment, all in all, over a 5 to 7 year period. Remember that it's private equity, so generally it's a longer game. That's not to say we wouldn't exit early. If there's an opportunity to exit at the right price, we would certainly do that before the 5 to 7 year period. But ultimately, you often need that time. So I think that's quite important. I think what investors should also understand is the exit here. We've done quite a bit of work on that exit. Dan mentioned it, that there are players out there, but interestingly enough, we've actually, discussed this with Vern. I mean, it's, Bain Capital, which is a very large financial institution. They would be a prime candidate for buying something like this. They're a large private equity business that effectively would take us out. The other interesting one that I found was Thule. A lot of the investors on this call would know Thule, and Thule's, to me, this fits right in their sweet spot. They're very, very much about the family and about the outdoors and about fitness. So Thule's another good example. So that's on the return. What does the 30% IRR mean? In kind of layman's terms, it means that we're targeting at least 3 times your money back within a 5 to 7 year period.
So let's just put that in English. To keep it simple, you put $1,000 in, and in a 5 to 7 year period, you're getting $3,000 back.
Well, 3,000. So yeah, 2,000 profit plus the 1,000 of your investment. Yeah. So I'm just we talked about the actual product itself, the carrier and the app. This slide here, once again, we've touched on it, the design, the fact that it's supported, it's been mentioned in numerous features, Women's Health, Telegraph, Independent in the UK. The market, I think that's quite an interesting statistic. The global baby carrier market is in excess of $2.2 billion. So when someone says to me, well, how are you going to go and compete? How's Carifit going to compete with all these other baby brands? It talks to what I mentioned earlier. It's about the quality, about creating a product that has its own niche, and actually there's a need for it. So you don't have to dominate the market here. You have to just be able to penetrate that market. And in a $2.2 billion market, I think, you should quite easily be able to do that. You don't even need 1% of that to really to shoot the lights out. So that's quite important. The next slide here, it does talk about what we've talked about earlier, about the moving from not only John Lewis, but then in the UK, and then from the UK into other markets, plus the online component. This slide also talks about the fact on the production. As I mentioned, we've done quite a lot of work on understanding, the production and the ability for this company to grow and handle that production. This slide here talks about the financial performance. You can see the projections if you want to, in terms of the expectation on revenue growth. It's coming off a reasonably low base, so you can see what we hopefully expecting. This business we expect to be EBITDA, which is effectively a measure of profitability, but EBITDA positive in 2026. So obviously through a growth phase, all your capital is being pushed out into production. But really this is kind of the targets that we have in mind. Once again, you can kind of go through that. I think it's important to understand that the business is generating revenue. I think for the 2024 year, they're expecting, I think the number was around about £250,000 in revenue. So, and that's coming off a recent launch. It's not like, although Vern has been doing this, he's been in the fitness world and he's been doing this for others for quite some time. Carifit in its existence as a baby carrier and an app has only really been going since, I think, midway 2023. And this is the team. So once again, I think this would be my final comment, is what's crucial to us is that there's depth in a team. You know, and certainly you've got a number of key individuals here that we know and that we understand, and they're well positioned for growth.
Awesome.
Yeah, that's kind of it.
Can I share quickly, just there's a couple of questions in Q&A, but I just want to share something quickly. If you don't mind, I'm going to steal the screen off you. So replace the current
Let me stop sharing. There you go.
So just to remind people quickly, if you want to do private equity, you can literally go and do all of this yourself, due diligence, tax. They spoke about the Isle of Man, Malta, everything. You can go and do it all, or you can literally go to a platform, sign up, set up your account, browse and invest, and earn an income. If you want to visually see what that looks like, you've got your investor bank account here. You've got your digital wallets, which are set up out of Lemonway, which is the biggest digital wallet provider in Europe. Every single one of us has a wallet. We've got our platform. A deal like this comes along, the investment opportunity, let's call it Carifit. We basically aggregate all the investors in terms of being able to invest together. It goes into one tax efficient SPV, and ultimately we've got the deal ownership. Then when you get the preferred return of 5% and or the capital at the end, it goes back into deal wallet. The money goes directly back into your wallet. You're completely in control of your money, which you can put back in your bank account. You can retire, you can go to Disney World, you can spend it, or you can reinvest. So there's 4 simple steps. Literally sign up, complete your profile, fund your wallet, and invest. If I just go here on the platform, so on the Wild Migrate platform, if you go to Marketplace, you can see under review. We literally did the webinar and the pre-launch for this on Tuesday, and this is the one that we're talking about here, Carifit. It still literally is being updated in terms of the details, etc. But if you do want to go in, you can start to read about it. And all of the stuff that Glenn is sharing with you will be here in terms of the documentation. So we're literally getting this up. One of the reasons that there's urgency and speed here, Glenn, which you haven't spoken to, is the timing. So my understanding from a timing perspective, and one of the reasons that we're working quickly here with Caleo Private Equity, is to get it launched, because as I understand it, and Glenn, tell me if I'm wrong, but we've got less than 4 weeks from people hearing about it today to funding their wallets, to investing, and to closing the deal. So in terms of the process. So, and then for those people that are part of the mastermind and that are dealing directly with Anthony, etc., again, we've got the private partnership with Private Wealth Global, which is where, it's the exclusive Caleo private equity opportunities. There's a discount on the fees and the private banking service. So both of the opportunities exist. In terms of safeguarding funds, we've got external cash custody, discretionary portfolio manager governance, designated investor accounts, ring-fence deals, designated corporate members, external custody of investments, and operational and investor segmentation. And so I just wanted to kind of give people a peace of mind on top of everything that Glenn and Anthony and Daniel have already expressed. And if anyone's got questions, they can just reach out to the team and or email invest@wealthmigrate.com. And obviously to the mastermind members and people that have exclusive access to Private Wealth Global, they've got the details to them. So just before we go to the Q&A, closing thoughts, and maybe we go with the order we went. Why don't we start with you, Anthony, then we go to you, Daniel, and then we go to you, Glenn. And let's wrap up. And I'll tell you why, just for people's time, then we've wrapped up. Then we can do the Q&A if people want to ask questions.
Sure. Like I said initially, I think for me this is an important deal for clients or investors that are looking to add some diversification to their existing private equity holdings. Of course, if they don't have any current private equity holdings, it's a fantastic deal to kind of get their foot in the door. I like it from a diversification point of view because it's situated in the UK. Firstly, and secondly, probably more importantly, from a sector diversification point of view, it adds a nice overlay to someone who might be property heavy or something like that. It adds a nice diversifier there in terms of the sector that it competes in.
Awesome. Thank you, Anthony. Daniel?
Yeah, I think Anthony sort of made a good point. We don't see GBP investments that often. So as a sort of a stable currency, it's one of the big 3. So that is advantageous to this specific deal. There is a certain element of bias because, Vern's a good friend, but that's why sort of I get to a point where I hand it over to Glenn and team. So, we can keep that sort of distance between, me knowing Vern very well and then actually running the proper due diligence process. But I think, from a product point and from where it is in the growth cycle, I think it's a tremendous product. And the fact there's a number of patents pending that protects the application of this product as well, I think it just sort of strengthens the case that this will be a good growth opportunity moving forward.
Also won a number of awards, which Glenn, I noticed you didn't refer to, but when I've read through the brochure and the due diligence pack, etc., it's won a whole lot of awards, which kind of emulates what you're saying about standing out as kind of a niche in that $2.2 billion market.
Yeah, and to be honest, I think, if we were going to pick holes in anything, Vern's actually a bad marketeer. There are a number of sporting personalities and Strictly Come Dancing fans and, a number of sort of, B-list and A-list celebrities that are already using the product and marketing it. So, that flow is starting to hit the market, and this is a problem where he's not able to keep up with the demand for supply.
Yeah. Well, I mean, in simple terms, Glenn, that's my understanding when we had our very first chat. I mean, it's simple business economics 101. They've got more demand than they got supply, and this is growth capital to try and solve that problem.
Correct.
So your closing thoughts, Glenn?
Yeah, I think I've obviously covered the bases. For us, as I said, it's true to Caleo Private Equity's, what would you call our like beliefs, and that's really finding down to earth, authentic, conscious investors who are on the growth based business, community linked, quality product, and obviously the most important, strong demand for that product and strong demonstrated demand for that product. I mean, the interesting thing is that I actually didn't know, but that organization for review care and health, they exist, and they actually analyze healthcare apps. And when Vern said, "Oh, we've been approved by the short form, it's called ORCA. We've been approved by ORCA." I was like, "Oh, yeah, well, yeah, whatever." And then I went and actually had a look. There's over 350,000 healthcare apps out there. I didn't know that, and apparently the downloads on those alone are about 5 million a day. So the healthcare app, as just as a business in its own right, is a very interesting industry, because I think what COVID did is it made people realize you need accessibility to healthcare, and the real question is, but how can I trust this app? Like, how can I trust the people behind this? And because I'm taking their advice here. And I think that's what I found quite interesting about this is this app specifically has that approval. So there's a number of big ticks. We wouldn't be having this conversation if I wasn't quite passionate about it. And I can tell you, Dan had to. I think I grilled him for months on this before I said okay. I think we can say we're good to go here. So yeah. We think it's a great opportunity.
Excellent. So just to wrap up, thank you very much to all three of you for sharing it. It's given me great insight as well. It's always fascinating. You can read the prospectus and the IMs and whatever fancy word you want to use, but it's so much better to hear the human angle. So I deeply appreciate all three of you kind of giving your insights, and I hope everyone else that's been online enjoyed it. And, for me, when I look at it, the one thing that, as a father, that I always say the easiest way to make money is to do something with babies and or weddings, because people tend to lose their like logic in terms of what they spend. So if you've got a good product that's in babies or weddings, then that's a good way to make money, full stop, So anyway, maybe on that basis, anyone that's been a parent will know what I'm talking about. So anyway, thanks to everyone. I'm going to pivot now to a quick FAQ, just in terms of it. So Sharon, thanks for picking up the what you found on the website. I think, Daniel, if you can just kind of take that up with Vern, just in terms of just something that she noticed on the website. Hang on, where's the bloody chat box gone now? Gustav asked, when was the app created?
They raised the money 22, and correct me if I'm wrong, Dan, but it was 23 that they launched it. So
yeah, 100%. Yeah.
Any other distributions are expected following the raise? I'm quite sure what that means, but So it would be, when would the
I'm
distribution start following the raise? I assume that's what it's asking.
Is it, I assume we're talking about the preferred distribution.
Yeah, you know, the 5%. So let's say I
the
put
5%.
in
So
$10.
the
When am I
idea
getting
here
my
is
return,
that,
you know?
okay. So to answer that is, there'll be the first distribution is after 12 months, and then thereafter, I think it follows either quarterly or semi-annually, in terms of those payments. And as I said, as long as the company is on track, then they will pay the 5% going forward. If for whatever reason the profitability levels drop, we then defer that 5%. But hopefully that answers that question.
Sharon asked, is the return net of fees? And Sharon, just as a matter of principle, and I think we've got a lot of alignment from the Caleo private equity team plus ourselves, we always do everything net of fees. So whether you go on the Wealth Migrate platform, whatever the returns you see on the calculator and everything else are net of fees, and also on the Private Wealth Global. So it's just really important that you know, anyone can promise you 100%, but it's actually what you get in your pocket that's important. So yes, and again,
that is net.
Please understand that we're jumping around and you know, we put this whole webinar together in under a week because the opportunity is there. Whether we're part of it or not, it's closing. So we're just letting people know about it. You know, even if the return and there's something you're interested, get your money to the Lemonway wallet, fund your wallet, so that as soon as it goes live in the next couple of days, you know, people will be able to participate. But don't come in 4 weeks and say, oh, it only went live and I didn't have time to move my money, because Glenn's not gonna care. I don't know how to say. You have compared Carifit to Ergo being a premium provider. Where would you say Carifit is in the overall premium first price? From Gustav.
So it sits as a premium carrier. So you know, it's at a price point that is comparable, you know, to market. So, you know, Ergo Baby, they retail for anything from sort of 270 GBP down to around about 180. Baby Born in that sort of similar price frame. So it sits squarely in the middle of Baby Born and Ergo Baby. But the slight difference is the material they use. So it fits, they use Flyknit technology. So if you've ever owned a pair of running trainers with that mesh around the running shoe, that's the Flyknit. And that's the bit that sort of makes the baby carrier much more lighter, more breathable. And then that's laser cut, and then it's stitched. So yeah, it fits that premium category.
Sharon asked, what's the minimum investment? On the Wealth Migrate platform, it's $1,000. And on the Private Wealth Global platform, it's $50,000. Then Sharon said, Daniel, so Sharon, maybe you and Daniel should chat. You saw something on the FAQ page in terms of that. So maybe Daniel, if you can just look in the chat box there, you'll see what Sharon's referring to.
No, absolutely, yeah. It'd be
Gustav said, distributors equal John Lewis. Store distributions, apologies. Gustav, you really are getting me guessing as to what you're trying to say between a comment and a question. But yeah, I think we did refer to John Lewis. Again, I lived in England for 9 years. I know who John Lewis is. That, you know, that's someone that's really quite significant and adds a lot of credibility to your product. But I'm not quite sure what your question is in terms of that process.
I think I've got a good understanding. So yeah, you know, John Lewis was just the first distribution partner, and they had an exclusive arrangement that expired several months ago. So what they've started to do now is go out to other distributors and sign up new channels. So they've recently signed a European deal with a Turkey-based provider that's going to be 250 stores from a distribution point of view. So a massive chain in Europe. They've just signed up one of the premium distributors in Ireland. And they've also captured 3 or 4 online distribution channels. And now, as they've sort of garnered and built that momentum, what they're doing actually is sort of just taking pause, you know, do the capital raise to build the inventory and stock. And they're eyeing the US distribution as a massive market. But what they're being quite sensible with is just taking a bit of time. You know, so they're not trying to spread themselves too thin. So, you know, they'll build market dominance through the UK, Europe, and then once they've got the inventory right and that you know, stock sitting there, then they'll target the US markets.
One other, just I see Yeah, you extended it. So thanks, Gustav, just in terms of clarity. But the other one was Mamas and Papas. I think if you Google Mamas and Papas UK, you'll see they're also pretty substantial. So that was the whole idea of taking away the exclusivity from John Lewis to actually expand on a broader basis into other distributors in the UK and elsewhere for that matter.
Awesome. So I think that's a great way to end off. Just to wrap up, I think there's really three things if you look at all three of them and what they spoke about. The first one, from Anthony's perspective, if you're looking at your overall portfolio construction, you should have some private equity in your portfolio construction, which a lot of people don't. The second component is on the assumption you should have private equity. How do you find a good deal or a bad deal? And ultimately, from my own experience, and I know I'm aligned here with Caleo, it comes down to quality partners, and that's where Daniel went through it at a lot of detail of the experience and the understanding of who the partner is, the integrity, the background, all of that stuff, which is really important. And then finally, it comes down to the product. And I think Glenn went into that and what this is all about, and obviously as an investor, what type of returns one can expect in terms of space. So I deeply want to thank all three of you in terms of just kind of giving a holistic view of what people have as an opportunity. If it is something of interest to you, literally if you're watching it today, the 15th of August, you've got under 4 weeks to participate. Please don't leave it to the third week and the sixth day, because it doesn't operate like that. So there's something of interest to you, move, get your money into the wallets so that as soon as it's live, you can participate. Because the other problem that we've always got with Glenn and them is they've got an allocation, and if someone writes them a check tomorrow morning, it's thanks very much. I hope you had a nice learning lesson, but you won't be able to participate. So it's first mover advantage in terms of that process. So yeah, thanks everyone. Really appreciate your time.
Yep. Thanks everyone.
Cheers.
Thank you.
Thanks, guys. Cheers.